All right, we're live. Good Monday. Good Monday. Good Saturday morning. Feels like a Monday because that's when I see you at the office. What are we? 9 a.m. Eastern Standard Time. This is episode number 10. Today's topic is credit reports and what you need to know. Andrew, welcome.
Good morning, Richard.
Still feeling sick, eh?
Yeah, it's been lingering longer than I want it to, but I'm starting to feel better, and I'm close to 100% or getting closer to 100%. So at least it's progress.
All right, fella, now let's hop right into this. So today's topic is about credit reports, what information they contain, how they work, what makes up a credit report, how credit card companies often screw up and don't report correctly. What information is contained in a credit report? Let's just hop straight into it. Go ahead.
Okay, give me a second here. I got something popping up on my desktop. Okay, so what is contained on a credit report? Well, the credit reports are contain various pieces of information that lenders look at to determine if the applicant is worthy of the credit application that is being applied for. So two of the most important components that the credit report contains is one, what debts are on there. Who do you currently owe money to and how much? That's the first thing that they look at. And the next thing they're looking at is, of those debts, are they in arrears? Are they reported as delinquent, derogatory, past due? And those are the two most important factors that they look at. But now there are various other factors that are on a credit report. Your name, obviously, SIN number, date of birth, last known address, previous addresses, current employer, previous employers. Those are other factors that are also on the credit report. Last but not least, there's also a section that is for inquiries, which is where you or other people have pulled what is known as a hard or soft copy of your credit report. A hard copy of your credit report is basically a version of pulls on your credit report that can actually be viewed. So, for example, if I was a lender and I was looking at your credit report, Richard, there would be an inquiry from Andrew because I was looking at your credit report, and that would be known to everybody who was looking at your credit report. Now, a soft pull of a credit report means that the only people that know that you've pulled the credit report is yourself. Nobody else. No other lenders know that I have pulled your credit report to check out to see what you're looking like in terms of credit stability. So those are your inquiries, your name, contact information, employment information, if obviously available, the list of your creditors, how much you owe to them, and if those accounts are derogatory or up to date.
Sorry to interrupt. I'm just going to see if I can share my screen and show you guys a version of the credit report, so you can kind of talk about it as you walk through. Can you see my screen, Andrew?
Yes. It's
present to everyone.
There we go. It's a bit bigger now. Okay. Is
that better?
Yeah.
So it might be harder to see on your screen because of the Hangout, but I got it bigger on my right-hand screen. So can you see my mouse?
No.
Okay. Well, top left where it says consumer credit file, that's basically the identification area. So your name, your address, your date of birth, your social insurance number, employment information, and all that information is basically collected when you submit files to Equifax or whoever it is that's collecting the data from you. You know, most often it's going to be your bank or your credit card company, and then it's updated there. So if you fill out an application form for a Visa, for example, and it says here test mechanic shop owner, well, you know, it's just a test version, but then that's what they would update on your credit report, even if your prior employer might have been, you know, master mechanic or something like that, right?
Exactly, yeah. So as you indicated, when you're applying for credit cards, loans, lines of credit, loan, overdrafts, car loans, whatever it happens to be, even a mortgage, whatever you've reported to that lender as your employer and your address, that it will be the most recently updated information on your credit report. So if you keep changing where you work, or if you keep changing where you live, that will continually change your credit report, and there'll be unstable status. And creditors are going to see that you keep moving or you keep changing jobs, and that deems you more credit unworthy because you don't have a stability, or you don't have stability with your employment and your residential situation.
So do not change your address and your employer information if you want good credit, basically, in summary. I mean, I know that some people, they might move from one address to another. Like, let's say their main address might have been their folks' home, like their parents' house. They might want to leave that as their main address if they're at university, or they're taking on roommates and it's only like a 6-month lease or 12-month lease, and at least that way they're showing stability and they can always get their mail from their parents' house, right?
Yeah, exactly. My recommendation would be is if you're a younger person, like 18 to 25, I would keep your mailing address as your parents' address for the duration of that time. It's highly likely that you're still going to have constant communication with your parents. You can get your mail on a regular basis, or your parents can forward it to you, because it's usually the younger generation that are relocating on a regular basis. It's the more stable folk, the older folk, that have a consistent residential address. And at that time there at 25 plus, that's when you can just start updating your address as you need to move for your actual own purposes. But when you're 18 to 25, you're going through school, you're going through college, university, or the first few phases or first few years of your employment life, things are going to be drastically different from year to year, depending on what kind of job you've got, depending on your relationship status. All these things take into consideration.
Right. And so let's keep moving along. So this next section over here on the left, second down, that's separated by the line. I know you can't see my cursor, but you should see things like SafeScan and then Equifax risk score. And then on this one, it says 609. It might be harder to see on your screen, but what does that score mean? Like this is a version of the credit report that a lender or a credit grantor might view, not the actual consumer. They have a much easier version to read for the consumer, but like we're looking at this from the creditor's perspective, so people understand what it is that they're looking at. So what does a credit score mean?
Well, the credit score is comprised, it's some kind of algorithm that nobody knows. The only people that know how that's developed are the actual credit reporting agencies themselves. So in Canada, it's TransUnion and Equifax. They don't publish, they don't divulge how their algorithms are calculated, but that is the credit score. So their internal algorithms will put together a credit score based on factors like how much debt you have, how much account, or how are the accounts in arrears or up to date, your stability with your employment, and your residential updates. So if you keep changing your address, and you're going to see your credit score be slightly lower. If you have a lot of inquiries on your credit report from various lenders, your score will drop. So these are factors that will contribute to your credit rating.
Correct. And this here is what you guys would see if you ordered your own credit report. You'll see some kind of like rev meter, and it'll push into like yellow and then darker shades of green saying good and excellent. And these aren't always a good indicator, because sometimes you'll see somebody that might have the needle in the green area, and it'll be like a 714 credit score, and it might indicate, hey, you've got good credit, or that's what they're implying to you. But if you've got, let's say, $30,000 worth of credit limits on 3 different credit facilities and $29,500 worth of debt on it, just because your credit score is 714 doesn't mean that you're going to qualify for credit. You're carrying a ton of debt, which means your credit score means absolutely nothing. It has no value. One thing I tell people when they walk around proudly saying, I've got a good credit score, but you're carrying all the debt around with that credit that's available to you. It's like, go and post an ad on Kijiji or LetGo or some sort of classified site that's available to you and say, hey guys, I've got a 730 credit score. It's available for sale. And see how many offers you get on it. Nobody will offer you jack for it, simply because, well, one, you can't transfer it, but two, if you've got a $30,000 credit limit but $28,000 worth of debt, it's worth nothing. You'd actually have to give them $28,000 in cash to pay off the debt for that score to have any value. So don't let that rev needle fool you. It's just a little trick that they kind of put out there to make you think that it's good and to keep you in the cycle of paying debt. So that's the credit score area there. Let me just scroll down a little bit more and see what's below that. This is the identification area, which will show current addresses of when files were open, date of birth. I'm not sure why it's duplicated on this one. Telephone numbers and tapes recorded. So this is a different one that we see normally when they come our way from mortgage agents and stuff. Let's keep going down. So down over here is the inquiry area, which is separated by these 2 lines, and you can see dates, member name, and then telephone number. Can you explain the inquiry area? Well, you kind of did, because you're talking about soft hits and hard hits.
Well, again, this is a report looking like a lender has pulled it. So this would mean a lender is only able to see who has done a hard inquiry on the credit report. So for, in this example, ABC Bank, Retail World, obviously these are fake names, Canada, Car Loans, and Mortgage World. So those are the hard inquiries that this individual credit report is showing. And each inquiry does contain a damaged hit to your report. There's no exact identification, because we don't know the algorithms that the credit reporting agencies use, but the rule of thumb generally is for every inquiry, it's 2 points that you lose. So on this example here, there looks like there's 5 inquiries, one at the very bottom from ABC Credit. So that would mean that those 5 inquiries are hurting this guy's credit report by about 10 points. Those are the hard inquiries. Now the soft inquiries, this lender won't see, because the soft inquiries are done basically behind the radar. It's inquiries by yourself, inquiries by your own financial institution that you're already banking with, that have just pulled the credit report just to see how things are going on your own personal end, to make sure that you're not a risk moving forward. Hard inquiries are inquiries by new lenders, so people you're applying for credit from. New cars, new loans, new mortgages, new credit cards, stuff like that.
All right, so there is the inquiry section. And just to add to that a little further, so let's say you're looking for a car loan and the Honda dealership says no. And then you hear an ad for, "We approve everyone, apply now to the loan arranger," the little jingle thing, and you go there and they decline you. And then you go to the next place and they decline you. And if you've gone to 4 different car dealerships to get a vehicle and they each decline you, if there's a quick succession of inquiries from members back to back within like a week or two, that's really going to do some damage to your credit. So if they're declining you, you need to find out why and deal with the problem. Don't go, looking for somebody else to approve you when they're simply not going to. I mean, if you go to a higher risk lender and they say no, you need to get to the bottom of it. You've probably got too much debt, in which case you should probably be talking to us about getting it all settled. But let's keep going on. Employment information has the details down there, which is pretty self-explanatory. It just says, where you've worked and who your employers were in the past. On the right-hand side, so on the top right over here, I've got a little gear wheel that kind of covers mine. You probably don't see it on your screen. But on the top right over here, you've got this section that says public records and other information. So if you owe things like Ministry of the Attorney General fines, if you have family responsibility debts for child support, if you have judgments there, if a creditor sued you, what else would show up in that area?
Well, car loans. So the Ministry of Attorney General is usually for the car loans. That's usually the Ministry of Transportation that's reporting that. But the other thing that you'll notice there are accounts that generally don't appear on the regular trade items. And that would be, and we'll get to the trade items in a bit, but the accounts that you will generally see in public records are accounts that are sold from an institution such as the example, TD Bank, selling an account to a debt buyer. So the debt buyer will report the new account that they've purchased under the public records. The other accounts that you will see occasionally under public records are accounts that generally don't appear on the trade items, which are payday accounts and overdraft accounts, but only when they've gone to collections. Accounts for payday lenders and from overdrafts from your financial institution do not appear on the public records items until such time as they have gone into arrears.
Got it. Okay, so scrolling down a little further, we're going to go down into the trade information. And in that area, can you see my cursor on your screen when I do it this way?
Now I can, yeah.
Okay, so I figured that out. Never mind. So trade information, you got member trades. So here it's showing Canada Bank, some details around when the item was opened, when it was closed, and some past due information over here. It's got some description where they would show the account number. Again, this would be like a creditor's version, so they'd see more details than what you would see on the public version. So the trade information, do you want to talk about that for a minute too?
Yeah, the trade information, which is what we call trade records, is the most important and the most detailed information on your credit report. This is actually basically what the credit report is for. It gives you the details of the credit that you've got. So using the example of Canada Bank, again, just a hypothetical name of a lender here, it's going to outline what your credit limit is to that lender. So looking at this example here, it looks like it's going to be 24,000, or it might even be 28,000 because the number on the left, again, this is a different version of it. But either way, it will outline what your credit limit is to that lender, what your current balance is owed on that limit or on that credit item to that lender. It will explain what your monthly payment is to that lender. It will tell you if you have any arrears monthly payments to that lender. It will tell you if that account is individual or joint by a co-signer. So J will mean joint, I will be individual. Mm-hmm. It will tell you when, I'm not sure if I said this yet, when the account was opened, which is very relevant in our line of work, knowing how long that individual has had that credit item for. It will also explain when you made your last payment.
So,
Uh,
so just so the headers at the top would basically be like top down. So here it's got written off date, credit limit amount. Over here it's got your high credit. Now the high credit would be the highest balance carried on it. Yeah.
Yeah, I've never, I know that it always has that, and I've never really figured out what that exactly means, but the credit limit is technically your credit limit on the account that your lender gives you. The
Right.
high credit, I think, is the highest point it's been at.
And then here it's open balance. And then all you'd really do is just go straight down the column. So for BB, whatever fictitious, creditor that is, it would be 156,000, probably a second mortgage. Yeah, here it is. So it's a second mortgage. And then for this one over here for Canada Bank, it's 4,000. Same thing over here. So this is payment amount due. So this would be $550 due on this facility. And this one over here would be $1,250 due probably for the second mortgage payment. And then the rating over here on the right, the RT. So R1 means it's up to date and it's paid every 30 days in full. Same thing with the M1. What does the M status mean? That's for mortgages.
Yeah, our status stands for revolving. So that's products that have a different monthly payment depending on what you're carrying on the product. And the revolving products are your credit cards and your lines of credit. Your monthly payments on those will always vary depending on what you're carrying as your balance. That's your R for revolving. Your M is a mortgage, and that's only for mortgages. And then I's are installment loans for installment loans, and that's basically it.
Right. And this is what a lot of people get hung up on. They're like, I have an R1 credit rating, for example. So these are what the numbers mean here. So one would be account is paid off within the agreed time limit. Like an R3 would mean that payments have been made, but they're anywhere from 60 to 89 days late. An R9 would be account is in heavy debt and sold to collections or filed for bankruptcy. It doesn't necessarily have to be sold to collections. It could be assigned to collections as well. But one of the mistakes that people make is they get caught up on like an R1, for example. And if you have an R1 rating, which would show over here, for example, but your limit is $28,000 on that facility, but your balance is $24,000, and your credit score, if we had this show up on a meter, was like 713, for example, and it says good, you might think, I mean, this is the lie of credit bureaus and credit scoring and what people don't understand. The rev needle could be in the good area. It could say you've got like a 740 credit score, for example. Go back over this screen, and it shows an R1, meaning it's paid up to date. But if you've got loads of credit that you're carrying with tons of debt on it, and you're not paying it off in full, and you're just making minimum monthly payments, that is utterly useless to you. And that's where people get caught up in the cycle of drowning in debt, and they just bury themselves in it. They think that everything's great and everything's tickety-boo because my statements say just pay $560 a month, but it's all going towards interest and it's never getting paid down. The illusion of the R1 being you're great and the rev needle being in a green area, you're great, is not true. It's probably one of the biggest misconceptions that people can't get their heads around. And for whatever reason, they believe they need to preserve those ones in the greens area when they have no value. I mean, if you went to the bank with a credit score of an R1 with a 700, for example, and all of your limits were, all of your balances were pretty much at their limit, your bank would not give you a debt consolidation loan. They'd basically tell you to pound sand in a very nice way. And you'd be left going to one of the high risk lenders that are going to charge you like 35% interest if you're lucky to get out of it. And that's where people end up in an even worse cycle where they'll go and pay off these other loans and create one new loan. So they'll consolidate them all into one, start making one, which, they call an easy monthly payment, or what they believe is to be an easy monthly payment. And then just get caught up in a new cycle, paying even higher interest to somebody else.
And then they re-rack up the credit cards that they consolidated to begin with. So now they got more debt on top of the consolidation loan that they just applied for.
Yeah. Like at the end of the day, coming to us with problems like this before you have to go and pay 35% interest to some ripoff artist is going to be a far better way to tackle this problem than digging yourself into an even deeper hole before you try to deal with the problem. And then you slam into a wall. Because there's nobody else to lend you that money once you're paying 35% interest. I mean, all you're really doing is trading off, like Visas and MasterCards and retail store cards at 19% and 28% for 35% into one payment. So it's multiple payments at lower interest into one payment at higher interest. And I'm not really sure what the thinking is behind that, but it's really just digging yourself into a deeper hole. Anyway, go ahead.
Yeah, so if you keep scrolling down, we've now basically covered the trade items. And looking further, inquiries we've covered. Below trade items, it says checking savings. Well, this is something new because banking information.
We don't see this on the versions that we get, but
I've never seen banking information on a credit report, and the reason for that is because banking information is not credit. Banking information is your money in your own account that you have access to. The credit report is utilized for credit items that you're trying to borrow. So I'm a little bit surprised that on that version of the report that you were showing, there was information about banking. I've never seen that in 13, 14 years of experience. So I'm not sure what exactly that was. Maybe it was just an example, but I've never seen that on any credit report.
Yeah. All right. Well, there you have it, guys. There's also, what else were we going to talk about? How credit card companies often screw up and don't report credit correctly. Do you want to hit on that a little bit too?
Sure. So obviously, over the many years that we've been doing this, we get copies of individuals' bureaus' credit reports on a regular basis. In fact, now it's a mandatory policy of our business to ensure that a client, when we retain a client, that they provide a copy of the credit report, so we can ensure that we have a true understanding of what their debts are, who they owe, how long they've owed them for, and so forth and so forth. A lot of the times, clients come to us with errors on their reports, or after the settlements have been reached and paid, errors then become pretty prevalent on their credit reports moving forward. So again, the rule of thumb that we've seen is 1 in 6 credit reports I think I've seen or heard contains an error. And so that's pretty frequently, right? If you're looking at 1 in 20, that's about what, 16.66%, I think it is. So 16% of credit reports contain an error. That's pretty high. And those errors will hinder your credit rating. So in our line of work, what we've seen is, a settlement's reached. Let's just assume that you have a $10,000 credit card and that institution has agreed to take, let's just assume $5,000 on it. They report to the bureau that you owe 0, or they're supposed to report to the bureau that you owe 0 on that, and that a settlement has been reached. Now, what we've been seeing here and there is that the credit reports show a balance of the difference from what the balance on the card was and what they have received from the settlement. So again, in the example of a $10,000 credit card paying a settlement of 5, the difference of 5 is what's reported on the bureau is still owing. So what that's doing is bringing the score down of that individual because there's a balance reported as outstanding and a liability of a $5,000 payment is required. So that happens quite frequently. And obviously we don't know the reason for that exactly, but what we can explain is that there's various reasons for it. And one of them is that in most examples, the party that receives the money mostly is a collection agency. Because when the accounts are in arrears, banks generally don't collect on their own debt. They usually assign it or sell it to a debt buyer to collect on their behalf. So the collection agency that received the settlement is supposed to update to their client, the bank, that they've received a settlement in full of a product. Again, example, $10,000 credit card, $5,000 settlement. They should be notifying ABC Bank that they've received a settlement of 5 on 10. So that the bank, when they update the report on their quarterly basis, usually is what it is, to Equifax and TransUnion, note that the balance is 0 and that the account is settled in full. So a lot of the times it's just human error. The collection agency doesn't advise the bank correctly that the matter has been settled in full. The bank then updates the report saying that they've got a payment of $5,000, which leaves $5,000 remaining on that account, and there's the error on the credit report. In fact, I just spoke to a client yesterday who brought up this very example, saying that her credit report is showing a balance to a debt buyer of over $12,000 when that account was settled approximately about a year ago. And she's refinancing her mortgage, and she's wondering why that's still reported as an incorrect item.
All right. Well, there you have it, folks. Got a couple questions here before we get to that. We got like 6 minutes left before we wrap this up. I just wanted to say, if you have over $15,000 in credit card debt, any kind of unsecured debt, so lines of credit, maybe you got a lease residual or a finance residual, the vehicle was repossessed, and you're struggling to get it paid down. So if you're just throwing money at it, or if you're not really throwing money at it and nothing's happening, or even if you are throwing money on it, it's all going towards interest, get eaten up that way. You're going to be in the cycle of paying it off for like the next 50 odd years of your life. If you look at the statements, it tells you exactly how long it'll take you to pay off. So again, this is Canadian debt. We're a Canadian company. I know we get people from around the world asking, we get inquiries from around the world. We can only help you if you have Canadian unsecured debt. Just visit us at totaldebtfreedom.ca and you can get a quote from our debt consultants there on some options to get out of debt. Even if we can't help you, we'll send you off in the right direction. It might even be bankruptcy or something else. So let's deal with these last two questions here and then we'll wrap off. Curtis said, are charge-offs worse than collections? They're the same thing, yeah?
Yeah, charge-off. Charge-off is just a term used by the institution that says that they've attempted to do their internal collections for 6 months. And after their 6 months of internal collection procedures, they've deemed it a bad debt and they've written it off and they've gotten a tax credit, or they're going to be applying for a tax credit from the government for uncollectible debt. So it's just a term used that at 6 months, it's written off, then it goes to collection agency or a law firm or whomever that the bank is looking to hire to collect on their account.
Yeah. And the second question we got here is, do you think debt is a psychological problem? I've noticed people tend to shop without considering the long-term damage by not being able to control themselves with credit card. I'd say it's a combination of a math problem because it's basic math, really. I mean, if you make $5,000 a month and you're spending $5,000 a month, you're going to run into problems at some point, right? It's always spend less than what you make. So yeah, it's a math problem and it's a psychological problem. People are sold this bill of sale to just buy more, buy now, pay later. Don't pay a cent event for 12 months or whatever the lyrics are that they sing to you to sell you to, pull out your plastic and buy more crap that you really don't need. So yeah, I mean, it's a combination of just basic math skills and psychology. Did you want to add to that one?
Oh, you hit it on the nail right there. I would 100% agree with that.
All right, folks, back next Saturday. If you're watching this as a replay, leave a comment below. And if you have a topic suggestion for us to cover on another broadcast, we're going to aim to do these every Saturday for 30 minutes. They're always going to be live. The recording will be available afterwards. Again, if you live in Canada or if you have Canadian debt, maybe you're an expat living somewhere else in the world, and it's over $15,000 of unsecured debt, visit us at totaldebtfreedom.ca. We're a debt negotiation company. We can get you out of debt for about half of what you owe, usually within about 2, 3, or 4 years. It really depends on your budget, but we'll always work with you. Anything you want to add before we close up?
No, I'm good.
All right, that's it. See you guys later.
Enjoy your weekends.